Sometimes it is mandatory, and that means it's required by the sponsor to continue and review in the selection process. So it's usually stated in the request for proposal, and it specifies the RFP should specify the acceptable methods of cost share, the amount or percentage required, and specific conditions for the cost share. So for example, if the total cost of a project is $200,000, the sponsor might award $150,000 and require that the university provide or find an outside source to provide the additional $50,000 from non-federal funding sources. Excuse me. Voluntary cost share, either committed or uncommitted, is offered by the university, but it's not required by the sponsor, and it's not used in determining the award. So for instance, the use of lab equipment as part of cost share for a new federal proposal. So equipment that was purchased with local funds, and that's important that it's local funds and specifically for this project. Generally, voluntary committed cost share is discouraged because for a number of reasons. It adversely affects the recovery of facilities and administration costs, so what we call F&A, obviously. It reduces the PI's ability to conduct other research because they're providing more of their time toward a particular project. They may not be able to take on others. And it increases the auditable record keeping for staff. Cost sharing itself is subject to audit more often, and folks need to make sure within departments, and the PI, him or herself, needs to make sure that this particular record keeping is diligent and meets the necessary requirements for the university and federal guidance. So again, generally voluntary cost share is unallowable. And because once it's offered, it becomes an obligation by the university and it must be met. So a PI cannot say, oh, I'm sorry, I volunteered this, but now I can't quite make that commitment after all. Once it's signed, the award becomes, this particular aspect of the award becomes an obligation for the university. There are different types of cost share. So in-kind cost share is a manner in which, say for instance, existing ING funded faculty and staff time or effort can be devoted specifically to the project. Generally in the post-award process, this is accomplished through maybe a FARED to remove some of the faculty members. If they're an academic year faculty member, to move some of their salary to that particular project. There's also cash cost share that usually involves an outlay of hard dollars or funds specifically allocated to a sponsored project. So for instance, travel costs covered by the college or the school or the department that advance this particular project, say a field visit or something like that, in which those particular costs are covered by the school or department with local funds. Third-party cost share is where outside entities can contribute to the project in a volunteer effort and such as sub-awardees. So in addition to UNM policy 2430, federal policy must be adhered to, so the Office of Management and Budget has uniform guidance and the links provided. So cost share must be necessary and reasonable for the performance of the federal award. It must be verifiable through university records. Again, that's something you'll often hear throughout presentations regarding cost share, to make sure that those records are easy to verify the particular cost share obligation has been met. And cost share must conform to any limitations or exclusions set forth in the uniform guidance and in the federal award as to types or amount of cost share items. So specific sponsoring agencies will have additional policies regarding cost share. The National Science Foundation, the Department of Energy, the Health and Human Services Department. So it's always good to refer to the agency's guidance, the sponsoring agency's guidance, or the private entity's guidance regarding cost share. So if cost share is committed in the form of property, it must be at the current fair market value. While you may have a piece of equipment that was valued at $150,000 at one time, its depreciation must be factored in when offering it as cost share, and you offer the current fair market value. So if at one point it's now only worth, that machinery or that equipment is now only worth $100,000, you want to make sure that you offer that current fair market value and the cost share. If volunteer services by third-party professionals, then the rates must be consistent with that work if paid through fair market. So competing for specific kinds of services, generally the market value must prevail in the evaluation of the specific wage that the person will be offered as cost share. There are certain unallowable cost share expenses. So, and again, uniform guidance states some of these, as well as UNM policy 2430. Examples, obviously other federal awards cannot be used. So one federal award, funds from one federal award cannot be used as cost share for another federal award. Institute facilities like a laboratory space, this is already accounted for in FNA, so it can't be used again to meet a cost share requirement. That's considered, that'd be considered double dipping essentially. So important considerations for the pre-award process. So where to begin? First, provide yourself enough time, especially if you haven't worked with cost share very much or at all. Ideally, it'd be nice to have at least a few weeks, so 4 to 5 weeks, depending on the complexity of the proposal or the cost share. Are there sub-award institutions that are going to be included? All of that needs to be considered by the PI when beginning any type of proposal entailing cost share. You want to make sure you read through the proposal. The PI reads through the proposal thoroughly. Keywords, cost share is not always the specific term used. It could be matching, could be leverage. So you really want to make sure that you are able to read through and understand if cost share is required. If it's not, but the PI, or if you yourself are the PI, you'd like to offer cost share to maybe make your proposal more competitive, you feel, please discuss it with your department and the Office of Sponsored Projects, should there be a desire to volunteer any cost share. And if cost share is required, you want to make sure that you know your department or college and school's approval process. That could take time in itself. Within the department, is there a specific format in which the chair can review any cost share and approve any cost share? Within the school or college, is there a particular process? Is there a limit to the cost share that a PI can make across proposals? Obviously, a PI is not approving generally for creating a proposal for one award, but they are applying for a number of different awards. So, for example, within the School of Engineering, we're really fortunate to have folks who have put together quite a succinct process for cost sharing. There is guidelines, a flow chart for the approval process, and specific FAQs that we in the department, as either department administrator or departmental accountant, can refer a PI to in regard to the school's process. Generally with approvals, things like that, seeking the dean's approval or their designee's approval takes time. So this is why we want to make sure we begin this process as quickly as we can. And I know the HSC has its specific process for requesting cost share as well. So you always want to make sure you check in and see what the process is and give yourself and the PI enough time to complete that process. So completing a budget and its justification, cost share must be stated specifically in the proposal if it's required. So again, looking for those keywords such as leverage, cost share, matching, that sort of thing. Make sure you review with the PI, and if you're the PI yourself, make sure you review the technical portion. Be careful of language that may seem like voluntary cost share. So if there is cost share that's required, and you have set forth that plan for cost share, make sure that you include it in the budget. So a separate budget sheet is created for the cost share for the project, as well as the actual project itself. So in that specific budget sheet, and there's a link here to an OSP example, there's a specific dollar amount for any cost share that is included as part of the proposal. And again, a college or school may have its own template. Within the School of Engineering, we have specific templates for budget that are helpful for us in that process. With the budget justification, the cost share is provided in its own section and outlines a specific manner of the cost share in a narrative format. So for instance, detailing that it's the current fair market value for a specific piece of equipment, if that's offered as cost share, that's one thing. And don't forget that Streamline has a specific subsection relating to cost share, and to make sure to complete that portion, generally the data validation should let you know if you do not complete that, but it's always good to just make sure that you go through and as thoroughly as possible to make sure it's included. And generally, those are the considerations, some of the more basic considerations for pre-award. And hopefully the award is granted, and then you're moving on to post-award cost share.
Thanks, Janine. So once the grant or agreement is awarded, it'll be processed through OSP, and it will come to contract and grant accounting for setup with a new grant number. I'll talk a little bit about if there is a cost share, how it's going to be set up, and how it should be monitored depending on the type of cost share, and then some other important considerations for you to keep in mind. So once it is awarded, there's some general helpful tips to keep in mind throughout the life of the cost share. Expenses that can be considered cost share usually must follow the terms and conditions of the main award. A good example of this would be unallowable or unallowable expenses like food or something. If it's unallowable on the main award, it's going to be unallowable on the cost share as well. Another example would be budget monitoring. So if the main award requires approval for deviations in the budget, then the cost share is going to require that as well. Agencies like NSF allow for a lot of flexibility in the budget, and the cost share might be similar to that as long as there's no other restrictions in the terms and conditions. When we do set up a new award in contract and grant accounting and we send the index notifications, we always send the award documents that come to us from the agency. So if you know that there's cost share involved, we should always be reading through those terms and conditions, but specifically for cost share, making sure that we meet that requirement. Go back one more, sorry, Janine.
Sorry.
I paused for a minute, my bad. For reporting, generally there will be some sort of interim or quarterly reporting that's required to the agency for cost share. Usually if it's a cost reimbursable award, we will report any cost share with the invoices that we send to the agency. But if that's not the case, or if it's in-kind cost share from a third party, we just ask that the departments and PI keep track of that and keep as much documentation as possible so that if we do have to report that to the agency, we're able to do so quickly, and it'll help it with closeout as well. There's a couple, our office, Contract and Grant Accounting, has quite a few trainings and guides that are very helpful for monitoring. We have a lot of helpful banner screens and My Reports, but a couple, most of you are probably aware of these, help you see the budget and any activity that posts to a specific index. And so if there is a cost share index code set up to track any institutional cost share from UNM, you'll be able to use Banner Frigited Screen or My Reports Grant Ledger Detail Summary to help you see the budget that was set up and any expenses that are posting. Now you can do next slide. So there's multiple ways we can track cost share expenses. As Janine mentioned, there's basically two different kinds. There's institutionally funded by UNM and there's third party. And then under that, there will be either in-kind or cash. If it's a third party cost share, it depends on how we're going to monitor it. If it is something like a subawardee, it will be a subaward will have its own account code on the main index code. And that's where we will track any invoices that they send us. But if the subawardee also has a cost share commitment, they should be reporting that on their invoices to us. And our office will keep track of that, and it should be kept track of at the department level as well. If it's third party in kind, in other words, contract and grant accounting won't necessarily be monitoring it. It should be the PI's responsibility, but the PI may also ask their department accountant or administrator to help them track that and document it so that we can report it to the agency. Institutionally funded cost share. So this can be in kind or cash. A new index code will be set up under the main grant number, and a budget will be set up using the cost share spend plan that's received and completed during the proposal stage. This index code will allow for any release time to be charged to the cost share index, or any new expenses like travel or new equipment that was obligated. The CGA fiscal monitor will complete a JV either annually or when it's awarded, depending on the cost share spend plan. And they should be letting you know and communicating with you when that JV is going to be completed. So we have a few different types of conditions that come forward through cost share. These will be indicated once it's awarded, and it should also be known at the proposal stage how the cost share is going to be met. But a few of the different kinds that we see frequently are cost share of a specific item that we have to provide. This will usually come through as tuition or fringe, or maybe a new piece of equipment. An example would be if on the main award, a student's salary needs to be expensed, but all fringe and tuition must be paid by UNM and provided by UNM. So the salary will be set up on the main index code, but any fringe and tuition will be charged to the cost share. Another one that we see frequently is a specific dollar amount is required for cost share. For example, $50,000. This amount has to be met regardless of how much is awarded on the main award and how much is spent on the main award. That's our commitment that we are required to make. Sorry. Another one that we see is based on the award amount. So regardless of how much we spend on the main award, there may be a specific percentage that is required in cost share based on the actual awarded amount from the agency. An example there is the award amount is $100,000 and the cost share requirement is 25%. So regardless of how much is spent, we would have to meet that $25,000. And then if any supplemental funding is awarded, this must also meet the percentage required in cost share. Probably the most frequently that I see is that the cost share requirement is a percentage of the amount spent on the award. So regardless of the amount actually awarded, we have to provide a specific percentage of each dollar spent. This could be 100% for each dollar spent, so a 1-to-1 ratio, or it could be for every dollar on the award spent, we have to match 50%. F&A can become a little bit complicated in cost share. There's two situations where we might be able to include F&A as part of our cost share commitment. When we set up a cost share index, there is no F&A budgeted on that index code. So if you look in my reports or in Banner, you won't see a budget for F&A, and no F&A is actually expensed to that cost share index. But we might be able to use imputed F&A as part of our cost share commitment. This is F&A that UNM could have taken if an allowable expense had been charged to an award. We use the federally negotiated F&A rate of 52.5% right now, and it has all of the same modifiers that most federal awards use. So if we charge salary to a cost share, we can expense imputed F&A on that and include that as part of our cost share commitment. Another example that we see, this is not quite as frequent, unrecovered. This is F&A not recovered on the regular award. Sometimes a regular award will come through and the F&A might be lower than our federally negotiated rate, for example, 20%. If the agency allows us, we can take the difference of that 20% and our federally negotiated rate and use that unrecovered F&A to meet our cost share commitment. Both of these should be accounted for at the proposal stage. If they're not, we'll need to ensure that the agency allows us to use those two types of F&A to meet our cost share commitment. At the closeout, the fiscal monitor will work very closely with the department and PI to ensure that our cost share obligation has been met. The department and PI should be documenting all cost share and keeping track of it on their end as well. This is a very highly scrutinized and audited area. So please document everything you can. Our office does as well. If the third party cost share or in-kind cost share falls short, the deficit will need to come from the over expenditure index from the department unless agency approval is obtained after the fact, which might be difficult. If we do have a cost share index set up and the main award or that cost share index are overspent or underspent, generally items can be moved between those two index codes and no 90-day memo would be required since it's moving within the same grant number. However, if the main award is spent out and the cost share ends up being overspent, there may be a loss to the over expenditure index. And similarly, if there's any remaining funding and we've determined that the obligation has been met, we'll return that cost share funding back to the original source. There is a lot of assistance, particularly in core offices regarding cost shares. Departmental accountants should be very familiar with cost share requirements, but in the event that there are any questions, there's many offices, the Faculty Research Development Office and the Office of Sponsored Projects are great resources for pre-award questions. If there's any communications post-award that need to occur with the agency, that will also go through OSP. Contract and grant accounting is a great resource, your fiscal monitor specifically for any questions relating to post-award monitoring. If there's any issues with the cost share commitment being met, you'll work closely with your fiscal monitor and contract and grant accounting. Janine, did you want to talk a little about the RAN meeting and training?
Sure. And for folks who haven't looked into the archive for the Research Administrator Network, there is a great 3-part series concerning cost share for September 15th, October 13th, and November 10th of 2020. I felt this was really helpful the first time that I encountered cost share. There's a wide variety of guests from school representatives to departmental representatives, folks in central offices, and it goes into a lot of depth concerning cost share. And so if you haven't had a chance to take a look at that, you'll really want to. I feel it was a very strong presentation and 3-part training that will definitely help. So that's essentially where we have prepared up to. Do folks have any questions? Yeah. It's Kenya.
Yes, I do have a question. For the F&A on the cost share, how often do you practice that at the main campus as far as applying it to, to the cost share?
It's very frequent, actually. I would say probably the majority of the time we see it. There's imputed F&A, and like I said, it'll usually be included on the cost share spend plan at the proposal stage. So the budget that is filled out saying here's where we're going to spend our cost share, there's a line item listed in there for imputed F&A. And that way it's kind of the agency approval is included in that process at the proposal stage. But yes, it's very, very frequent, I would say.
I'm from the Health Science North Campus, so we don't apply F&A to the cost share. That's what I was just wondering how often you guys do it. Thank you.
Sure.
Does anybody else have any questions, or if there are any folks from OSP or who might want to add anything or bring up some instances where you felt like cost share can get a little complicated and how your office navigated that issue. that'd be great. Yes, Christine?
We just recently had a cost share and it was using unrecovered F&A. Kind of confusing. I'm not really sure how it's going to look on the post-award side. And I was just curious because there's not really an index. It's not really identified with any concrete cost share per se, third party or anything else. And so, and it's not full unrecovered F&A. Our F&A should have been at 45%. And our direct costs were like 500,000. And the agency only wanted 25% of the total costs. It was very confusing, of the total costs to be cost shared. So that was 166,667 for $500,000 of indirect. It was, I mean, of direct costs. It was really confusing. And so in this case, I'm not really sure. I mean, we didn't really have a cost share spending plan per se. We're pulling up to the 166,000, which will probably be done within the next, within the year and a half, as opposed to the 3 years. It's really crazy. So I just wanted to know what normally happens with unrecovered F&A and how is that tracked by contracts and grants?
Yes, that's a great question. You're right. Sometimes cost share can be unnecessarily complicated, it seems like. Like you said, it depends kind of on how it comes through in the main award. So if the cost share commitment is $167,000, is part of that funding coming from a UNM index code, a UNM source?
No, all of that money is unrecovered F&A. So we would have normally charged 45% on this grant, and it's $500,000 direct. But because they weren't allowing us to charge F&A, we got to use that piece as the cost share commitment. So it was just it's a little funky. So there's not really like a index number. There's not anything that's coming from, because it's kind of like, I call it funny money, because it's not really concrete money.
Yes, yeah, absolutely. I would say probably once it is awarded, whoever the fiscal monitor is will probably have to set up a spreadsheet to track it. And I'm guessing the unrecovered F&A will be based on whatever amount is actually spent on the main award. So, if the main award is underspent, the unrecovered F&A won't be quite as much either, because I believe it'll be based on the amount that is actually spent on the main award. We can't recover F&A on expenses that don't exist. So that's usually based on whatever is spent on the main award, whatever amount is spent.
Okay, that makes sense. That's going to make sense. It's just the amount of expenditures that hit. If those expenditures, if the complete expenditures for that any given year don't hit, they won't have the F&A that would have been booked, right? Yeah, okay.
So it'll be really important to keep track of the cost share commitment in that. Are they requiring a specific dollar amount in cost share? Or is it, like you said, a percentage of whatever is spent on the award, or what is the percentage? So if it's a percentage of what is spent on the award, then it should be no problem, because whatever is spent will have that unrecovered F&A on it as well. Okay. It'll be interesting to see how it comes through in the main award, and it'll require some tracking on the fiscal monitor's side as well.
And also ensuring that the PI is burning what they need to, for the year, making sure that they completely spend their awarded funds that year, so that way the cost share also hits. I mean, yeah.
Correct. Yes. Yes.
Thank you.
Mm-hmm. Just have a couple more minutes here. Are there any other questions, or did anyone have any weird experiences that they want to share?
Something from the FRSO side. When we're helping people with cost share, we usually encourage them to first talk with their department chairs and their deans, and then only after those conversations have happened should they reach out to the VPR's office if they require additional cost share. Because the VPR's office will ask, well, have you met with your department chair and your dean, and are they committing anything? And so that helps sort of smooth the way for that conversation should they need those additional funds.
That's very true, Monica. Sometimes, you know, PAs might not know or be totally in the loop concerning departmental or school or college approval prior to any other requests for assistance and cost shares. Okay, does anybody have any other questions? All right.